Charlie Munger, for many decades at this point, has been known as the right-hand man at Berkshire Hathaway to Warren Buffett, one of the richest, most famous investors of all time, arguably the greatest to ever do it. But Charlie Munger is a phenomenal investor in his own right. He had his own investment partnership through the 1960s and 70s, which returned about 19.8% per year. And that period of time actually included a massive stock market crash during the early 1970s. Now, in this video, we're going to be talking through one of Charlie Munger's phenomenal investments that was made in the early 2000s. In his words, he made around $80 million with virtually no risk.
I found one investment opportunity in Barron's, out of which I made about $80 million with almost no risk.
We're going to go back and analyze the investment that Charlie Munger made in a company called Tenneco at that time and go through all of the things that Munger was looking at in the early 2000s and how that investment played out. Now, before we get into that, I have to give a shout out to two resources. The first one is a YouTube clip of Charlie Munger himself, uploaded to YouTube by Infinite Dreams Publishing. There will be a link down in the description to that video. And the second thing is a blog post / article from Broken Leg Investing. Now, Broken Leg Investing also analyzed this investment that we're going to go through today, and a lot of the numbers used in this video come from that article. So with all that said, let's get into this investment, this phenomenally profitable investment from Charlie Munger. Now, the investment that we're going to talk about today took place from around 2001 till about 2003, 2004 sort of time. And that investment was in a company by the name of Tenneco, an auto parts manufacturer. And it's really interesting how Munger actually came across this investment idea in the first place. In his own words, he had been reading Barron's for 50 years. In every edition of Barron's, there are a certain number of stock tips. And after 50 years, after seeing that Barron's suggested that, this was a cheap stock, he did some digging and actually made an investment. Now, to have the patience to read a whole lot of stock tips for 50 years and then suddenly put money to work in an auto parts company after all that time, after only about 2 hours of research, by the way, is phenomenal. It displays extreme patience, but also extreme decisiveness when the right opportunity does come up. So that is how Tenneco got onto Charlie Munger's radar. In terms of the company itself, Tenneco, like I said, was an auto parts manufacturer. They own a few different brands, probably the Munger shock absorber being the most well known, and Charlie Munger did have a little bit of experience in this area. He knew that car parts like the Munger shock absorber were very sticky. There were a lot of old cars that were highly dependent on these parts, and it allowed him to get his head around the business relatively quickly. Now, through the 1990s, Tenneco was quite a profitable business. They produced EBITDA of $300 to $400 million a year. They produced net income of $250 to $300 million a year. But by the late 90s and early 2000s, the business was facing headwinds. Although they had some of these brands within their business that these old cars, classic cars, were quite reliant on, the auto parts business is cyclical. It does go through ups and downs, and they went through some serious downs through the early 2000s, to the point where they were losing a lot of money. They were accumulating more and more debt. Shareholders' equity went negative, and there were a lot of fears in the market about Tenneco actually going bankrupt. Now, Munger, after doing some digging on Tenneco, had other ideas. He did not have the same fears of bankruptcy that the general market did, but what he did was something really, really interesting, which actually protected his downside, even if the stock did go bankrupt. Now, Munger did that by investing in Tenneco in two different ways. Firstly, he just straight up bought the stock, and we'll go through some of the numbers in behind that investment shortly. And the second thing he did was he actually bought the bonds in Tenneco. He bought some of the debt, and as we'll talk through later, that was a way that he could protect his downside even if the business went bankrupt. Now, Charlie Munger, as you may already know, is a value investor, and he is not out there in the stock market looking for low risk, low return investments or high risk, high return investments. He is looking for low risk and high return. This unique combination that value investors seek, basically by paying a price well below the intrinsic value of those assets. So firstly, let's take that thinking and look at the investment in the stock of Tenneco. Now, in my mind, the stock investment that Munger made in Tenneco is probably a medium to high risk investment actually, but it had an extremely high reward if things did work out. Now, the bonds are much lower risk and still had a high reward, which we'll get to shortly, but first let's talk through the stock itself. Now, through the 90s, when Tenneco's business was performing really well, the stock was trading at about $50 a share. Now, when Munger first made his investment into Tenneco, the stock had crashed very dramatically all the way down to about $1 per share. And within that, the business of Tenneco had an enterprise value of about $1.6 billion. Now, if you're not familiar with enterprise value, basically the way I like to think about this is what is the earnings power of the assets of this company worth. In this case, that was about $1.6 billion for Tenneco. Now, you may not pay that exact price when you invest in the business because there's things like debt in the business, there's things like cash, and that may mean that you pay a little bit more or a little bit less than the enterprise value for that company. Now, in the case of Tenneco, although the market was valuing the earnings power of those assets at $1.6 billion, they had $1.52 billion in debt. And that meant that you ended up with a very highly leveraged stock with a market cap of only $80 million. Now, what that means is that we have an enterprise value and debt that are almost the same number. We have a thin slice of equity at $80 million. And what that basically tells us is that the market cap or the stock of Tenneco is very highly levered to that enterprise value price. So if the earnings power of the assets goes up a little bit and people value those assets slightly higher, we're going to get a very highly leveraged return because of all the debt that is built into Tenneco. Now, at that time, auto parts companies were typically valued at an EV to EBITDA multiple of about 6.5. Now, regular viewers of the channel may know that that is also the acquirer's multiple. A 6.5 acquirer's multiple is very cheap for many types of businesses. So it's certainly not unrealistic to see a 6.5 multiple put on the enterprise. Again, we take off the debt and then we end up with a market cap or what we should pay for that business. But the maths basically works out like this. So if Tenneco could restore its earnings power, its EBITDA production at least to around $300 to $400 million, that would put the enterprise value of Tenneco back up to about $1.95 to $2.6 billion. Now, we still obviously have that $1.52 billion of debt built in, but we get a highly leveraged stock and upside if that earnings power does return. And in this case, that would put the market cap anywhere from about $430 million right up to about $1.08 billion. In stock price terms, that could take the stock from $1 to as high as $10 to $27 if Tenneco could return its earnings power to normal. So right there, even though Munger is investing in a stock with a lot of debt and what on the surface of things might look like a fair bit of downside, we have dramatic upside if earnings power does return to anywhere near normal, anywhere from 10 to 27 times returns if EBITDA gets back on track. So overall, the stock is a medium to high risk investment with an extremely high return. So now let's look at the bond investment. Now, in my mind, and I think really in Charlie Munger's mind as well, the bonds are a almost zero risk investment, an extremely low risk investment, which still has a high return. Nowhere near as high as the stock that we just spoke about, but this is where Munger put a fair chunk of this investment money towards as well. So let's talk through the bonds. Well, the bonds were issued at an 11 3/8% yield maturing in 2009. Basically what that means is for every $100 of debt that the debt holder has issued to Tenneco, they would expect to get around $11.37 in interest each year, and then they would have all of their principal paid back in 2009. Now, if we go through to when Charlie Munger was looking at this investment, there were a lot of fears that Tenneco were going to go bankrupt, and you could actually buy this debt for 35 cents on the dollar, and that is exactly what Charlie Munger did. Now, when Charlie Munger bought those bonds, Tenneco was still paying the 11% or so interest on that debt, and they were paying the 11% or so interest rate on the original amount, on the full dollar value of that debt, the par value of the debt. Now, since Munger had acquired that debt for only 35 cents on the dollar, the interest rate that he was effectively getting paid on his purchase price was more like 33%. So over the 2 or 3 years that he held those bonds, he was earning 33% a year returns in interest on the bonds that he'd acquired. Now let's look at the possible outcomes for this bond investment. Firstly, if everything goes really well and Tenneco returns to its normal earning power and the fears of bankruptcy go away, basically these bonds are worth par. The 35 cents is going to go back up to $1. Munger is going to get his 33% interest per year in the meantime. And when it goes back to $1, he's going to get roughly a 3x return on that investment because he's got these bonds going from 35 cents back up to $1. Now, if things don't work out well for Tenneco, Charlie Munger has bought these bonds at such a distressed price that him being a debt holder in the business, he's actually likely to get some equity in a potentially restructured Tenneco after a Chapter 11 bankruptcy. And this is the main reason why I think Charlie Munger is really saying that this Tenneco investment had basically no risk. If things went back to normal, his 35 cents would turn into $1 with him receiving a lot of interest in the meantime. And if things went bankrupt, and even if the bondholders took quite a substantial haircut on their full dollar of debt, he's bought it at such a substantial discount that he's likely to still get his money back, if not even make a little bit of money, even through a Chapter 11 bankruptcy. Because what happens in a bankruptcy is that stockholders go to zero and the debt holders are first in line to try and get some money back out of the assets of that business. So there are the two investments that Munger made in Tenneco. The first one is the stock, medium to high risk, extremely high reward if things work out well, but a potential of going to zero if things go bankrupt in that stock. But then he also had the bonds, and the bonds were still a pretty high upside, as much as a 3x plus 2 years worth of 33% interest per year. And downside was basically zero in the mind of Charlie Munger. It was almost a no risk investment as he put it in the bonds. Munger bought a little bit of both. He bought both the stock and the bonds, and he waited a couple of years to see how it panned out. So, how did it work out? Well, by about 2004, Tenneco had in fact returned to a more typical earnings power. Their EBITDA went back up to around $350 million. They were valued at about that 6.5 times acquirer's multiple, and that translated into about a $15 stock price for Tenneco. Munger had gotten a 15x. He went from $1 per share through to $15 per share, at which time he sold. Now, the stock actually continued onwards over the subsequent years to about $30 or $40 a share, which Munger did not capture, but still, he got a 15x in 2 or 3 years on that stock. Now, in terms of the debt or the bonds that Munger held, those bonds got re-rated as well. So he collected his 33% a year interest for a couple of years. The bonds went back up to par and even traded at a slight premium. So they went from 35 cents on the dollar through to about $1.07 before Tenneco actually repurchased those bonds and went and sought cheaper financing elsewhere. So overall, things worked out extremely well, and Charlie Munger was able to translate a $10 million initial investment through to around an $80 million final exit from Tenneco within about 2 or 3 years. Just an amazing investment return. Now, that's not quite the end of the story. There is one more thing that Charlie Munger did with this $80 million, which is really interesting. He shipped that $80 million off to Li Lu, who is a very well-known value investor, and put it in his Chinese investment fund. Li Lu is the only fund manager that Charlie Munger has ever put money with, and he's actually turned that $80 million into about $400 or $500 million. Now, if we do a quick Google search on Charlie Munger's net worth, and of course, these net worth Google searches are a little bit of a guess oftentimes, but this tells us that Charlie Munger is worth approximately around $1.7 billion. Now, some basic maths tells us that this one investment decision to put $10 million into Tenneco, and then the second decision to put those profits into Li Lu's fund, have resulted in about over a quarter of Charlie Munger's entire net worth coming from these two decisions. Now, Charlie tells us all the time that great investment opportunities are rare, and when they come along, you have to jump on them aggressively. do the work, understand the risks, and put the money to work and see how it plays out. And that is exactly what he's done with this Tenneco investment. It's a phenomenal story that I absolutely love, and I've been wanting to share it on the channel for some time. So if you did enjoy the video, I would really appreciate you hitting like and also subscribing to the channel if you haven't already. But that's all from me today, and I will see you in the next one. Cheers.